remember you were amongst the first ones to kind of foresee how some of the oil price gains are here to stay. The upgrades came in on the upstream companies and they did well for a reasonably strong period.
Yes.
So energy broken into two and different components there. What's the equity thesis?
So the way we look at it is that you are better off staying with the refiners, especially those refiners who export. So there are two elements over here. Is the commodity price risk to the downside or upside, and in which commodity? And second, do you have regulatory risk to the business model? So you want to stay with businesses where you have the maximum upside risk to the commodity, what you're doing. So if you're a refiner, refining margins outlook is still relatively strong. If you're a gas producer, then the outlook to the gas price is better. And where the regulatory risk is relatively lower. Now, if you're an exporter, you are still better off. So what has happened is in the India energy space, policy becomes a big overhang, and that is what is impacting stock prices.
Yeah, and but you should continue to stay. In which case?
So my sense is that you go to the second order derivative. So instead of buying energy, you look at metals, because when energy prices stay high, metal cost of production will remain high. So metal prices would also remain high. So you're better off with metal producers who benefit from higher energy prices. If you're an aluminum producer, aluminum prices go high. That is, I think, the way to look at the value chain.
Can I probe this a little? So metals have had an interesting last 18 months, right? A ferocious up cycle followed by a bit of a down cycle that has come in. Now maybe a bit of a stability, but prices are still very volatile, to say the least.
Agree.
So how do you build this hypothesis?
So I think the volatility is inherent. That's not going to go away. But take a step back. $2,300 aluminum, which is the price today, was the cycle high price in 2018. It was a 10-year high price. $600 steel prices used to be the high prices for steel. So what has happened is that the cycle has reset higher, but there is still an inherent volatility which will stay depending on the consumers destocking and restocking. So a $300 to $500 steel price range has probably moved to $600 to $800. Aluminum has probably moved higher. In that new cycle, we are at the lower end right now, because the last 3-4 months seasonally are always very weak globally. There's destocking which happens in Asia because of rains. There's destocking which happens in Europe and US. Now we are entering this busy season, and we need to wait and see as to how the expectation of a recession next year clash with the on the ground demand at this point of time. Because while everybody expects demand to be weaker next year, so far we are not seeing signs of demand weakening this year, and inventories are low. Consumers destocked, expecting prices to fall. So when you start consumers coming back, China's seasonal demand picks up. Where do prices go from here?